Welcome back to Instabills, everyone. Again, going over our intraday and swing trade perspective. Again, mentioning over the weekend that we would be gapping up into our prior gap down here. However, swings being cautious, again, ending with the red candle here at the end of the day, but very much continuing into our prior gap down. Where exactly may we be headed next, as we are leading into Powell speaking tomorrow in pre-market and CPI on Thursday. I'm going to go over exactly what we're looking for here. If you guys are day traders, if you're looking for very volatile breakouts, we mention them every single day in the Instabills room, 2.5 hours before market open. Every single day, go to instabills.com in the description below, and only for $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the daily chart with you guys here, I wanted to go over our overall picture, and then I'm going to go over exactly where we may be headed next here. As you guys can see, our overall picture is that we have been trying to make sure that we did not get any rejections on the upper end of our channel, which is exactly what we have been avoiding on these couple of rejections, again, the last couple of months. Again, as you guys can see prior, we did have multiple rejections on the upper end of our channel, showing us that we were going to be cautious leading into the upper end of our channel. As you guys can see, we did have a spike on Friday from non-farm payrolls, looking to see if we would continue just as we did suspect here. Again, gapping up into our prior gap down. Again, on the 4-hour chart, it looks a little more clean. As you guys can see on the 4-hour chart, we did spike up. We had a momentum candle to the upside, getting our engulfing candle, breaking above here and continuing with our 20 over our 50 here on the 4-hour chart, showing us that short-term momentum. However, not giving us that proof of concept on the upper end of our channel quite yet. So again, we were cautious for swings, but again, intraday, we did mention that we had strength. We did have that gap up. Now the question is, where are we headed from here as our 20-day is crossing below our 50? Are we here for a rejection here on a 50-day moving average, or are we here for that possible respect on the upper end of our 20-day moving average, which will give us our possible momentum to the upside? Again, looking to see if we will respect our 20-day and cross back over our 50 is going to be that bullish case scenario, and that bearish case scenario is going to be looking to see if we will continue on with this pullback, drop down back below our 20, which will give us that watch for that possible continuation on lower if our 20-day does start to continue on lower, and that could be that confirmation on that engulfing candle to the downside from here. So again, looking for confirmation. We're looking to see if we will respect our 20 to the upside, cross back over our 50 from here, and then look to see if we do get that proof of concept on the up end of our channel to see if we can continue. However, as far as to the downside for swings, we are looking to see if we will get that confirmation on an engulfing candle to the downside. Again, a very nice spike that we had on a gap filler here. Looking to see if we will now continue on with this rejection on our 50-day moving average. That's exactly what happened intraday. We had a spike, we had our rejection on our 50-day moving average, and exactly here on our prior gap down. So again, exactly on point as we did suspect over the weekend. And as far as strength, again, we mentioned this over the weekend that we have our EMA lines that were curling up here, looking to see if they would cross, and they basically were crossing just before going into today. So we did mention that we did have this spike, now giving us that increase in buy pressure, looking to see if we will continue on with buy pressure. However, if we do not continue on with buy pressure, if we continue with that possible momentum that we have with our EMA lines crossing below the median of our MACD, then we could possibly continue on with that increase in sell pressure, being very cautious. However, we do have that short-term momentum to the upside, so we're going to also be cautious to the downside, looking for confirmation to the downside, and to the upside, looking to see if we will respect our 20-day moving average. Maybe we get a possible engulfing candle going into tomorrow. We'll see exactly what Powell mentions in pre-market. And then a lot of Feds today mentioned that they are data dependent, so they're very much giving CPI a lot more credit here possibly this Thursday. So again, that is going to be the next watch. Maybe we get a possible spike with Powell tomorrow if he does come in dovish, and then we get that possible retest on the upper end of our channel, and then CPI possibly comes out higher than expected, which would give us that pullback. Again, that would mean that inflation is turning out a little more entrenched, which would give us that pullback and possible continuation on lower, and loss of anticipation of that possible Fed pivot that we did have. Again, on that anticipation, we're sitting on that anticipation of a possible Fed pivot. So we're going to see if we do get that possible momentum with Powell coming in tomorrow, or if we will possibly get that rejection. Maybe Powell comes in hawkish tomorrow and we do come back down and retest our 20-day moving average, and then we look to see exactly what CPI comes out as. Maybe we get a possible doji candle going into Wednesday, and then going into Thursday, we get that possible confirmation on either that engulfing candle with our 50-day curling over to the downside with our 20-day curling over, depending on exactly what CPI comes out as, or we possibly continue to respect our 20 and we start to give us that proof of concept. Again, looking for that proof of concept on the up and over channel will be very key for swings, and looking for continuations on swings, because we want to see that spike, that proof of concept with a pullback, and again, looking for that engulfing candle to show us that proof. Now, I wanted to go over our Bollinger Bands. As you guys can see, again, we never got that engulfing candle breaking into our second deviation here. Again, the lower end of our Bollinger Band, that is our deviation, showing us that we would have had decompression to the downside. We are now getting a spike consolidating within our Bollinger Bands here, not decompressing one way or the other. So again, not squeezing here, but again, we did get our nice gap up into our prior gap down. And our largest indicator that we have been tracking as far as strength has been the dollar. And as you guys can see, we did get that 50-day moving average, getting that rejection with our 20-day still below our 50. So again, we were looking for that continuation on bearish momentum, and we did get that continuation here, now dropping below and continuing on lower here on the dollar, getting that continuation on decreases in buy pressure again from non-farm payrolls on Friday. And now our EMA lines are curling down here, looking to see if they will possibly cross down below each other. Our 12 dropping below our 26 will give us that strength on the SPY. So again, we're keeping an eye on the MACD of the dollar. I know a lot of people may be looking for what the next support may be. Where exactly should we be bouncing? Again, we did have our major bounce that we had prior here at a very key point, but at this point in time, we are pulling back and we are looking to see if we will possibly continue here, since we are jumping into our second deviation on the dollar. So again, that could be that continuation on decompression to the downside, which is giving Powell and CPI room to possibly run if, again, they do come out exactly as expected. Again, Powell coming out dovish and CPI coming out with a continuation on lower. Again, our prior 3 CPIs have been continuing on lower little by little, and that has given us a better target for short-term outcomes of possible bullish momentum, because that would give us less time that we have to possibly wait. However, if CPI does come out higher than expected, then that would show us more time to possibly wait till the Feds do lower rates at a major pace. And again, with Powell mentioning that unemployment isn't exactly where we do need it, we are going to be cautious. We could just be coming up for a retest on that continuation on lower. So again, making sure that we are cautious, making sure that we are going to be looking for that confirmation like we had again over the weekend since Friday. Non-farm payrolls giving us that jump over our 20-day moving average, showing us that we could continue, and we would be looking for that possible gap up if we were looking for that confirmation. And sure enough, we did get that gap up. Again, we retested our 50 on the day, showing us that nice gap up. And again, on the 4-hour chart, if we're looking at it one more time, a very nice gap filler here with our 20 crossing over our 50 on the 4-hour chart, showing us that nice simple play here. But again, with that price target that we mentioned again over the weekend at 393 is exactly where we did mention for a reason, and that is because that is the upper end of our gap down here. So again, a nice play on the day intraday. As far as looking for swings, again, just continuing to look for confirmation here. Now, some people have been asking, if we jump above our upper end of our channel here, will we gap above our prior rejection here? That will be the next level that we test if we do get that proof of concept, is going to be our prior rejection that we had on the up end of our channel here at 428. So again, keep that in mind if we happen to continue here, that our 428 level is going to be a resistance level to our possible inverted head and shoulders here. As you guys can see, we have a possible inverted head and shoulder here playing out. That could be that short-term spike and possible momentum to the upside. So again, looking for proof of concept, looking for that confirmation. And again, when we do get that confirmation, again, we will know exactly when that happens, just like we had over the weekend. We knew exactly what was going to happen here. A very simple gap filler here, retesting our 50-day as we were leading it to Powell. Again, a very nice play if you guys did play that. Again, with our EMA lines crossing up here, giving us that clear. Again, we were almost exactly crossing over the weekend, guys. We had that clear play here with that continuation with decreases in sell pressure, showing us that we were looking for that increase in buy pressure, as we did mention, getting that nice spike today. So we'll see exactly what Powell mentions tomorrow, what exactly CPI comes out on Thursday as. And again, like I said, we mentioned any breakout that is worth looking at throughout the day in the instability zone. I know the market can get pretty choppy, but any breakout pre-market going into open, we mentioned anything that needs to be watched throughout the day. Go to instables.com in the description below, and you will never miss a breakout alert today again. And again, all of you instables that come over and support the channel every single day, I hope you guys did catch this gap up today. Again, a very nice gap up that we had into our prior gap down here. A very simple play, retesting our 50-day. We'll see exactly what Powell mentions tomorrow. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.